Good afternoon, and welcome to the BLANCCO Technology Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. I would now like to hand you over to CFO Adam Maloney and CEO Matt Jones. Good afternoon to you both.
Good afternoon. Thanks, Alex, for the introduction. We're excited to talk to you again. I know many of you have been part of this over the last few years. Adam, I'm really excited to share the first half results for you. And as the moderator said, if you have questions, please put them in the Q&A box, and we'll address those questions at the end of our session. So really, 6 topics for the call today. I'll take the first 3, starting with highlights for our first half results. I'm going to give you a company overview. It may be a review for some of you, but for new investors or for new people who haven't heard us, I want to make sure you know what we do. And then we're going to take a step down and really look at one of the markets we call on the enterprise market. It's our biggest, fastest growing market, and I thought we'd kind of do a deep dive in that. I'll hand it over to Adam. He's going to look at some market growth drivers and financial review in some detail. And then I'll summarize, give you a quick outlook, and then we'll take your questions at that point. So let's jump into this. First half highlights, I think we're really excited to come off a very strong first half of the year. Revenue grew by 22%. We were helped with some currency that Adam will go to, but constant currency growth was 16%. And I think if you've heard us talk in the past, as we grow that top line, we have the operational gearing, that top line to grow bottom line as well too. So operating profits up 30%, EBIT up 24%. We did generate cash, and Adam will go through those details later in the presentation. We also did an acquisition in June of last year of WipeDrive, one of our named competitors that's mostly in the US. That's now fully integrated. I think we've been very happy with that integration. The customer transition is almost complete, where they're moving over to the BLANCCO product. The employees we kept are fully integrated, and I think both from a strategic perspective and a financial perspective, has been a really good acquisition for us. We also continue our sustainability journey, both externally with our customers and internally, as we want to be good stewards as well too. And we've just, through an outside agency, MSCI, improved our rating from single A to double A. So we're very proud of that. Double A is the second highest rating you can get. And I think for a small AIM-based company, a really good rating for us. And then finally, we announced some new partnerships, both with eBay and Tata Consulting. And I have a slide later. I think I'll go through that to give you some details on those 2 partnerships. Again, to just give you an overview of what we do, our basic capabilities is to be able to erase data off any device, any median, and then audibly prove that device was erased at a certain standard, so you know what was erased and when. And I think what we're seeing is this capability is becoming more and more important for our customer base. We've been doing this for now almost 25 years. We've erased hundreds of millions of devices, but I think because of the need to meet certain regulatory environments around the world, the need to secure your data, the need to become more sustainable, this capability of erasure and auditability of that erasure has become more and more important to our customers. And Adam will go through some of those kind of industry trends in a minute. We also often get the questions, whether it's from an investor or from a customer, of why BLANCCO? And so what you see is, I think we continue to build a market-leading product and are increasing the competitive moat we have between us and our competitors. We're doing that through product innovation. You see now we have over 40 patents filed. We're doing it through interesting partnerships and go-to-market strategies. We'll talk about some of those. We're doing it through our global reach. And so there's all these things we're building. And as we think about these different markets, I think we're showing that we're the clear leader in this. And as we talk a little bit about our strategy in the next year or 2, it's an important thing to keep in mind on why BLANCCO and how we're different. So as we think about both this year and next year, I've challenged my team to think about what do we need to do. And I think the key for us strategically is to strengthen our position as a software solution of choice in every market we operate in. We operate in 3 separate markets: enterprise, ITAD, and mobile. Each one slightly different, and our competitive position and where we sit is slightly different as well too. So enterprise, again, it's our largest market, our fastest growing market, and our biggest competitor is not another software solution. It's actually physical destruction. So the kind of the de facto standard for enterprises is to shred that equipment. But I think for all the reasons we'll talk about a little bit, there's a lot of tailwinds to change that inflection point, to move from physical destruction to software erasure. And we're doing everything we can to do that. So we're very well positioned as the software choice in enterprise, but we need to make sure we can convince our customers that physical destruction is not the right reason to do that. And I think there's a lot of reasons why that's moving our direction. ITAD, which stands for ITAD or stands for IT asset disposition, is the market we started 20 plus years ago. We're the de facto vendor of choice for every large ITAD in the world. We probably have 70+% market share in this market, and we continue to innovate and do things to make our choice or our ability our solution more and more valuable to them. And I think a lot of the tailwinds that enterprises are enjoying, both on sustainability, on regulations, is also pushing the ITAD market. The mobile market, I think, has probably been our kind of our most difficult market for many reasons. It's the one most affected by some of the global supply chains, some of the possible recession. It's the most competitive because our customers are the customers that process secondary devices. And that secondary device market is really determined by how many new phones are sold in the world. And we know over the last 18 months that new mobile phone market has been down about 10 or 15%. So it is a market long-term we're very excited about. And even though, as Adam will go through the details, we actually shrunk that market by 1 or 2%. That's actually taking market share given today's market. But if you look at a lot of the analyst predictions, this market will go back into a growth market. And what it is, I think we're well positioned to take market share and grow that at kind of single digit or even low double digit growth. So if you heard my presentation, I guess 6 months ago, we talked about our plan for FY23. Our fiscal year goes from July to June. And I identified, I think, 5 points that we wanted to really focus on this year. And on the right-hand side, I thought I'd give a little progress to date of how we're doing against that. So one of the things you've heard us talk about, if you've seen my presentations in the past, is about taking a channel-first strategy, especially in the enterprise market. And I think we're making really good progress on that. Revenue grew in the channels by 30% in the first half, and we've revamped our whole channel program to introduce new incentives, new partners, so that we can continue to grow this and see that channel partnership can be, the large majority of our distribution in the enterprise market going forward. We also decided that we'd allocate go-to-market and product resources into the high growth markets. And so what we've done is all new hiring this year has been focused on the enterprise and ITAD market. We've also moved resources, both our development and our sales, from the mobile, which is a slower growing market, as we just discussed, into ITAD and enterprise. So really trying to drive the efficiency as we look at our core resources. We've also implemented a formal account development program. When we win a big customer in the enterprise, we usually win one use case out of several use cases or one geography. And we think there's a lot of opportunity for us to grow within existing customers. And this account development program will help us, first service that customer better, but also drive additional revenue into the many customers we have. We continue to expand our product capabilities, and we hit all our major milestones this period. We also did further integrations into some of our key partners like ServiceNow and eBay. And as I talked about, we want to continue to drive our sustainability initiatives. And I think the best example of that is this MSCI AA rating that looked at us and judged us on how we're doing internally. So I think overall, really good progress, and I think right on target for what we had planned for FY23. So again, I thought, as I mentioned earlier, I want to take a little bit of deeper dive down in the enterprise market. It's our most important market. So I thought I'd try to give you as an investor a feel of what an enterprise customer wants and how we service them. So one of our key use cases in enterprise is in the physical data center. And it's just not one use case. It's actually made up of 3 different use cases. It's high volume remote data center erasure. And in a second, I'll give you an example of what exactly that means. And also anytime they do data center decommissioning or data center migration. So anytime data is moving from one place to another, from one data center to another, or from on-site data center to the cloud, that data that's left over is a good use case for us. And to service those customers, it's just not one product we have, but a family of products. So it includes our drive erasure, our LUN erasure, our intelligent business routing, which automatically works within the data center to prioritize what gets erased when and how it's done. It's our management console that allows them to have a full record of what got erased at what security. And then also sometimes we throw in some professional services. So again, it's not a single product we bring to the enterprise data center market. It's a family of products we have. And so I thought I'd go down even one more level and talk about a specific customer example. And so this is working with the biggest, arguably the biggest technology company in the world. And what they wanted to do as they talked to us is make sure they could do remote data erasure at scale. And so what you see is that a typical data center, a server contains about 80 hard drives. That's that little picture on the right you see. But the system administrator wanted to manage 6,000 of those servers at a time. So you're talking about almost 50,000 drives they want to be erased remotely within a day. So we had to really push our technology to make sure the interface could manage this at scale, that you could sort and filter the different options. If there is a failure, we give that failure status back, that we streamline communications. So over the last couple of years, we've worked with our big customers in this segment to really drive a product that meets their needs. And this is further complicated because these big data centers, people like Apple, Google, Microsoft, the big banks, don't buy off the shelf hardware from HP or Dell. They have their own proprietary drives. And so for us to erase, we had to make sure that each drive they use, we can erase. So I think it gives you an example of the sophistication that you need to have to meet this customer need. Another example I'll give you is with Amazon. And this is not AWS, which we've talked about in the past, which is their big cloud-based solution. This is actually with Amazon as a customer in their fulfillment center. So you've probably seen these monster fulfillment centers they have all over the world. They have 175 of them. They're the ones that do all this, the shipping, packing, sorting, returning. And we started with Amazon in 2015 with a single fulfillment center in the UK. Since then, we've been able to grow that to over 35 data centers, and 30 data centers, and now we have agreement for all the fulfillment centers in North America and Europe. And what they did prior to us is they would send it to a third party. It would take weeks and weeks for them to sort through it, erase it, and they found that most of these products were fine. So they said, let's just do this within our own logistics and fulfillment centers. And we do a whole myriad of things for them. We do hard drives, we do laptops, we do wearables like your iWatch, gaming consoles, and really be able to make this more efficient for them. So again, I think it's another example of our ability to meet the most sophisticated customers in the world and their needs, but also gives you an example of the upside we have to take a customer that is a major technology company and expand our relationship over time with them. I did mention, two partnerships we've announced this half, and I thought I'd go through in just a little detail what the partnerships are. The first one is with Tata Consulting Services, TCS. If you're not familiar with them, they're a multinational consulting company, $28 billion in revenue, 600,000 employees. And so we really have begun a partnership where they're going to sell our software to their customer base. And the solutions will be focused on two of their consultancy practices, one around data privacy and one around sustainability. The same reasons customers buy our solution, they have consulting practices for. We're going to target the financial services and healthcare because those are the two most highly regulated industries. And we're using the model they use with other partners. So we've actually funded a full-time TCS employee within TCS that we pay for that will represent BLANCCO within all the different opportunities we have. So that TCS employee will be on full-time by the end of this quarter. And I'm really excited about the opportunity we have to build partnership with a big global system integrator like TCS. Another one we mentioned is eBay. And this is not really focused on enterprise. It's focused on both our iTat and mobile segment. And eBay was really interesting in improving the buying journey within eBay. And so what they wanted to do was allow us to take their grading of all the different devices that they're selling on eBay and their buyers and sellers buy, and integrate their grading system into our diagnostics and erasure product. So we use eBay's grading system, and it makes the whole process better for everybody. It makes it better for the buyer because they know when they go on and they buy a device, they know that a grading system has been agreed to. It makes it easier for our mobile processor because they don't have to guess, is this an A, a B, or C? They're using eBay and our technology to help grade it. And it's better for eBay because they can then control the quality of the device that gets sold. So this is not an exclusive relationship with eBay, but it is one that allows us to reach out to these mobile processors that are usually medium and smaller ones that we haven't called on before and get the stamp of approval from eBay to do this. So we're excited about this, and one we just announced recently. So Adam, I think I'm going to pass over to you and let you take the next set of slides.
Thank you, Matt. Good afternoon, everybody. It's good to speak to you again. So I'm going to just touch on some of the growth drivers in the business. These are really pretty unchanged over the last couple of years. And the first growth driver is really around data privacy. Clearly, it's never been acceptable for customers to dispose of computer equipment and expose potentially the data that's on those devices. But the big change that we've seen in recent years is a lot more regulation around this, which comes with much heavier penalties if you don't look after your customer data properly. So GDPR was really the piece of regulation that kicks everything off here, but now it's looking as though that's going to really reach out around the rest of the world. So GDPR came in 2018, and now by the end of 2023, Gartner is saying that around 75% of the world's population will have its personal data covered under some kind of modern privacy regulation. The fines coming through are a lot more significant. We saw in 2021 that the largest fine under GDPR, which was 800 million euros to Amazon. And then last year we had the second largest fine, which was 400 million euros to Instagram. So very significant penalties if you don't comply with the regulation. So this is causing companies to spend a lot more money on data protection, data privacy than they have done previously. 15 billion is projected to be spent in this space by 2024. And the regulation keeps on coming. And most notably for us, we see a lot more coming through in the US now, where typically they've been a little bit resistant to regulation, but it's starting now to come through. So the California Privacy Rights Act now almost mimics GDPR. That was effective January 23. And it's not just affecting companies that are in California, but anybody that does business there, which is pretty much everybody in the US. California often leads the way as far as data privacy regulation or any kind of regulation is concerned. And so we then see other states tend to follow. And so we're already seeing Colorado, Utah, Connecticut, and Virginia implementing similar regulation. And we fully expect other places to come along as well. The final piece that I'll touch on in the US is the Cybersecurity Maturity Model Certification, CMMC. And this applies specifically to contractors into the American Department of Defense, and it puts certain pressures on companies to take extra steps around the data that they're covering. Clearly, it's very, very sensitive, the data that's anything to do with the Department of Defense. That talks specifically around data sanitization in certain circumstances, and we're hopeful that's going to now expand out to other parts of US federal government and provide a good opportunity to us. So data privacy continues to be important, but our challenge with data privacy is that the alternative to data sanitization, data erasure as we do, is physical destruction. And data privacy can be secured by destroying computer equipment, but clearly it's not a very sustainable way of doing things. We're starting to see this gain a lot more traction in the press now. The FT in particular ran an article in October of last year called Why Big Tech Shreds Millions of Storage Devices It Could Reuse. And it talks about the 23,000 data centers with an estimated 70 million servers around the world that continues to grow. It talks about organizations such as Microsoft, AWS, UK government departments who all shred their data storing devices. And they even say that 90% of data storage devices are destroyed when decommissioned, even if they're fully functional. So why does that keep on happening? We think it's because some IT leaders have a concern that, what happens if software doesn't do the job. But the FT covered that off and spoke to several industry insiders, experts, and asked if they've ever been aware of data being compromised after it had been wiped using software such as BLANCCO's, and nobody ever has an instance. So there's a video link at the bottom of this slide that if you wanted to catch a 3-minute summary of what the FT said, they published a video just a couple of weeks ago, and it's well worth viewing if you have a few minutes. We're also starting to see regulation come in as far as sustainability is concerned. So in the EU, there's a whole package of measures coming in around what they're calling the Green Deal. But specifically around reporting and disclosure, they have European Sustainability Reporting Standards. This is going to require all companies over a certain size to publish a certain set of statistics every year as part of their annual accounts, and that will have to be verified by your auditors. So the idea with this is really to get a consistent set of statistics published by companies on an annual basis, verified by third parties, to make sure that anybody reading those accounts has a clear understanding of the sustainability direction that those companies are taking. And we're seeing that regulation being replicated in other parts of the world. So we're seeing in the US, the Stock Exchange Commission are putting similar regulation in place. International Sustainability Standards Board are really covering other areas outside the EU and the US. So what we're looking across the board over the next couple of years, you're going to see a lot more data being published by companies on their sustainability impacts. And that will put pressure on them to do better. And so what we're hoping to see is that will see a reduction in the amount of e-waste that's being generated by by companies, a reduction in this shredding practice that we continue to see. And that clearly would lead to great growth opportunity for BLANCCO. So I'll now move on to the financials. Matt touched on some of these highlights earlier, but I'll just go over them again. So revenue-wise, 22% growth in the 6-month period, which we're obviously very pleased with. Matt mentioned earlier, we did see some benefit from the US dollar strengthening over the period where we do a fair amount of our business. So adjusting for that currency movement, the underlying growth would be 16%, but still pretty strong. We have very high gross margins, so 98% gross margin, and our cost base doesn't tend to grow by the same proportions that our revenue line grows by. We did see an impact this year that if the dollar strengthens and our revenue is worth more, but it also means our US cost base costs us more as well. So we have a sort of a natural hedge that goes in both directions, but it meant that our cost base grew by more than it normally would. And we also saw the impacts of travel returning in the period. But despite that, we saw our adjusted operating profit increase by 30% from 4 million to 5.1 million in the period. We saw EBITDA increase by 24% from 6.4 million to 8 million. So a really nice drop through from the growth in our top line to the bottom line. Our cost base is pretty fixed, so this is the operational gearing that we talk about. You can see the margin percentages. We've edged up a little bit from where we were last year, so 21% for the operating profit compared to 20% at the same point last year, and still at 33% on the EBITDA margin. We ordinarily see those margins contract a little bit in the second half of the year because there'll be cost investments that we've made in the first half of the year at some point, which will have a full 6-month costing in the second half of the year. So I do expect that to pull back a little bit, but we continue to expect to see a trend of our operating and EBITDA margins continue to increase on an annual basis. As far as the balance sheet is concerned, it's a pretty unremarkable balance sheet in terms of things to really pull out. But I guess the key numbers that people tend to look at are our cash balance. And we ended the period with 7.9 million of cash, up from 6.2 million at the end of June, the end of our last financial year. So good cash generation, but I expect that cash generation to be even stronger in the second half of the year. We had a very strong period end. So you can see our debtor balance was up as high as 11 million at the end of December. And that would unwind in the early months of 2023, January, February. So as of right now, we would have a much higher balance of cash than we had at the end of December. One point I would point out is that we do have a deferred consideration payment you'll see on there of £1.2 million. That relates to the White Drive acquisition that we did last year. That completed in June and had this additional payment that would be due in the event that we retained the vast majority of the White Drive customers. And pleasingly, we are retaining the vast majority of the White Drive customers, so we fully expect that payment to be made in full. Just going to spend a couple of minutes talking about the revenue trends by the three markets that we operate in. Enterprise, we absolutely believe that this is going to be the high growth part of the business. When Matt and I joined the company in 2018, that was really where the statement that we pinned our flag to, and it's proven to be the case. It's gone from being the smallest part of the business to now the biggest part of the business, and it's growing faster than the other parts. So it grew by 33% in the period. Even adjusted for currency movements, it grew 24%. And that's largely supported by the channel activity. So we saw our channel revenues increase by 30%, and that means that channel now represents 56% of all the enterprise revenue. And on the face of it, that's a little bit less than we did in the first half of last year, which was 57%. But that's because some white drive revenues have come through, which are all direct. There's no channel activity there. So as that continues to get integrated into the rest of the business, we'll see the proportion continue to increase. And we certainly have an internal target. We'd like to try and push up towards 70% representation of channel within the enterprise. But we certainly believe that enterprise on a looking ahead basis, there's no reason that we shouldn't be able to continue to grow this part of the business at least 15 to 20%. And if we can see some of the initiatives around sustainability really start to push through, who knows, maybe that can push on faster. ITAD has had a fantastically good last 18 months. We saw it grow again nicely by 30% in the period, so up to 9 million revenue. We do believe that ITAD has benefited from a little bit of a boom period as we came out of the pandemic. ITADs deal with solely end-of-life equipment. And then we think there was a bit of a backlog of equipment that accumulated through the pandemic. And when people returned to work, that backlog was caught up on. There was also some reconfiguration of office space when people returned to a more hybrid working environment. So that's really assisted the growth in the ITAD business. We don't expect growth in the ITAD business to continue at 30%. We do think it will drop off, but probably only to around the 10 to 15% sort of mark. We do still think this is a very interesting growth opportunity for us. And then finally on mobile, as Matt mentioned, mobile has been flat now for around 18 months, and it's really a function of what's happening in the brand new smartphone market. So we seen data that suggests that the market is for brand new smartphones is 10% down on last year. And that's really borne out by what we're seeing from our customers. Our customers typically are processing 10% fewer handsets than they did last year. And that's because their supply is completely from where handsets have been traded in when new handsets have been bought. So if somebody isn't buying a new handset, they're not trading in the old one. So that's caused our market to slow down a little bit. We do think this is going to come back. People won't be able to stick with their old smartphones for too long because we've all seen that after a while the battery runs out quickly, some apps begin to not be supported. So people will update their smartphones, but we don't see that changing too much until maybe even the end of this calendar year. So this is the area, as Matt said earlier, we've got a little bit of consumer exposure, but we do expect mobile to come back in future years, but probably not for 12 months. Then final slide from me is just really the geographical split of the revenues in the company. You can see the effects of currency and where that's come from. So in the US, in North America, our revenue grew by 39%, but when you adjust for currency movements, it's only 22%. So a big strengthening of US dollar through the period. That difference won't be as big in the second half of this year. The exchange rates now aren't that different than they were 12 months ago. So I think that big FX movement is largely over. And you see in the other parts of the world, we've not seen such big currency movements. The thing that's particularly pleased Matt and I has been that we've looked at our sales offices around the world. We have 15 sales offices. They're all in different countries, and every single one of them has done more business in this 6-month period than they did last year in the corresponding period. So growth around the world, and you can see here actually the growth rates in the different regions aren't that dissimilar. So very pleasing to see it's not just one geography that's really supporting the rest of the business. It's very well supported across the whole world. So with that, I think that's my last slide, and I'll pass you back to Matt to wrap up.
Okay, let me come off mute here. Yes, thanks, Adam. So, just as a quick wrap up, very strong growth in the first half. And as Adam said, I think across all geographies, at least 2 to 3 markets, are very excited about that. I think we see strong sales and pipeline growth starting in the second half this year, though we want to be careful. There are some headwinds, as Adam mentioned, both in mobile as phone sales have flat, and even in ITAD as we see a little bit of a slowdown in that market. We did for the first time this year, did a systemic pricing increase across our markets. And so we'll begin to see some of that. And our plan is to make this at least an annual thing. As customers re-sign for new contracts, we believe we have market power to increase prices every year, like many of the technology companies we buy do with us as well too. You also know we brought some new sales management. I think they continue to drive really high performance. The new partnerships, I think, have opportunity for us to grow, and we'll continue to see us announce at a very select level key partnerships like this in the future. I think we'll continue to allocate resources that are to the most important markets we have to be really efficient and drive that efficiency. And I think we're confident, that continued growth, notwithstanding some of the macroeconomic short-term factors, on our long-term growth and opportunity, both from a top-line growth and from a profitability. So I think I'm going to wrap it up there. If we could get the moderator to come back on, we'd appreciate it, and then we'll drive into some Q&A.
Matt, Adam, thank you very much for your presentation this afternoon. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Matt, Adam, as you can see, we have received several questions throughout today's presentation, and thank you to all investors for submitting their questions. Adam, if I could just hand over to you to read out the questions and give responses where appropriate to do so, and I'll pick up from you both at the end. Thank you.
Thanks, Alex. Yes, we have had sort of 7 or 8 questions in, but please continue to send them in if you have any more. And I'll kick off, and I think, Matt, you can probably take this one. So the question is, who are your primary competition, and is it possible to model the instance of recycling and how that is trending market-wide?
Yeah, so I think competition depends on which market it is, right? And so what you see is, as we said, in enterprise and in ITAD, we're clearly the leader in software. So I don't think there's anybody. And we bought, one of our biggest competitors. We talked about WipeDrive, which is about 1/10 our size. So really, those were competing against physical destruction. In the mobile space, it's different. There's 3 or 4 competitors of kind of about our size, maybe slightly smaller. So it's a much more competitive market. But I think we're in a very good shape that we can model out, and we can both increase our market share in all 3 markets, given our go-to-market strategies and given our product capabilities. So I'm excited that in all those markets, I think we can continue to increase market share. ITAD being the hardest one. When you have 70% market share, a little hard to grow your market too much.
Yeah, I think in terms of the instance of recycling, our primary competition, I'm sure you'd agree, Matt, would be around physical destruction. I mean, we certainly, and I think as the FT said in their article, they believe around 90% of all data storage equipment in data centers is currently destroyed at the end of life. And I think the incidents around laptops, PCs, most other equipment probably wouldn't be too far off. So we think it's improving, and hence that's why we're growing. But it's still a long, long way to go.
Yep.
Next question is probably for me, so I will take this one. So it's, what visibility do we have over revenues delivered by the channel partners? So actually, it's very similar to we see with direct customers. We deliver licenses to our channel partners in the same way that we deliver them to customers, and we build them in the same way, and we can see when those licenses have been consumed. So yeah, it's and most of because our channel partners all work in enterprise, they're nearly all subscription contracts, so they'll be paying an amount of money every year to use our software. So we have good visibility because we don't tend to see any churn in our enterprise customers. Nearly everybody renews. The next question was, Matt, this one might be for you. Which mobile reseller partnership would you like to create that we haven't already got on our panel? And is it possible for us to inflect our market share in the space while we await a market recovery?
Yeah, so I think eBay is a great example of a market partnership we hadn't had in the past. Most of our customers today are the big mobile processors. There's 10 or 12 in the world. They process hundreds of thousands of devices a month, and we have the most efficient product for them to do it. So even though we're the highest priced, I think we're the most efficient for them because the amount of phones we can process. We've really never focused on the mid-market and the smaller processors, and that's what that eBay partnerships allows us to do. There's probably a couple others that I'm not really open to mention right now, but a couple others like eBay that are these mobile market ecosystems that we're talking to that allow us to kind of go into an untapped market. So I think what for us is it actually increases the total available market for us that we can call on, because I think we have a product now and maybe some partnerships that we can take advantage of and call on these kind of medium and small processors that allow us to kind of grow our market share and get to potential customers we never gotten to before.
Thanks, Matt. Another one for you. We refer to product development. Where geographically does that take place?
Yeah, so we have three product development locations. The company was founded in Finland, so Finland's our biggest product development location, but we also have one in India and also in Cork, Ireland. So 3 major development centers, and that's where all the development's done. So I think we're pretty fortunate that all 3 of those, it's a pretty efficient way to do development, and I think pretty cost effective in terms of our engineering talent.
Okay, I think next one will be for me. So it's what needs to happen before we start paying dividends, and I think Matt and I both believe that BLANCCO should be a company that has cash. It's cash positive, isn't reliant on debt. We like to have a cash buffer to make sure that we can manage any bumps in the road, but also so that we can act quickly if opportunities arise. And we saw that in June of last year. We bought a company called WipedRive. It was $10 million. We did the whole deal in cash. We didn't need to borrow any money to get it done. We didn't need to ask for money from shareholders. And we think opportunities like that will come up from time to time, and we want to be in a position to execute on those. So there are no immediate plans for us to start paying dividends. I guess what needs to happen before we start paying dividends, firstly, we need to continue to generate large amounts of cash in the way that we already are. And I guess secondly, we need to kind of run out of ideas of how we could accelerate the business faster rather than just paying a dividend. So hopefully that point doesn't come. So Matt and I have still got a lot of energy and a lot of ideas as to how we can grow the business quicker. Next question also for me, I think, what roughly is the percentage of revenue that comes from the UK? 10% is the answer. So I think it's our 4th or 5th largest territory. Behind the US is our largest, then Japan, then Germany, and then I think it's the UK would be our largest. So yeah, around 10%. Next question, one for you, Matt. Where are you seeing the biggest new opportunities for the business?
Yeah, I think it's a couple places. Clearly, it's enterprise, right? I think we've mentioned enterprise. We think it's the biggest market, and within enterprise, I think it's 2 different things. One is, as we talk about growing our base of customers within our existing base. We have 2,500 customers. Often they use us just for a subsection of their overall solution for data erasure. Often our biggest customers also do physical destruction. So I think there's a lot of upside on our existing customers. And I think through channels, it'll give us reach into customers that we don't have in the past. So we're excited that as we expand our channel reach, we can get to new customers that as a small a technology company just can't. Because I think there's lots of opportunity in our existing base and lots of opportunity in driving new customers. But I'd say enterprise is clearly the top focus for us as a company.
Okay, and we're down to the last question. I'm a little nervous to ask you this one, Matt, but it's do you see the need to strengthen your senior management team? The answer can't be yes at CFO.
Lucky I have a great CFO, but we did do some strengthening. We had a head of worldwide sales last year that was a very good individual. He retired. And so we went out and found a new head of worldwide sales. And I'd say I'm pleasantly surprised after 7 or 8 months saying that he's an upgrade, right? He has got great experience. He's from the US, great experience in enterprise, great experience in channels. I think he's brought a level of sophistication and has done some tweaking under his organization. So I think from a sales organization, we are in great hands. And I think the rest of the team has been with me now for almost 4 or 5 years since I joined. Adam was my first hire. We've got a really strong head of development, a really strong head of HR. So I would say, no, we have a team right now that I'm totally satisfied with us, can take us to the next level from a company perspective.
We had one more came in, Matt, which I think, again, is for you. It's, which strategies do we plan on incorporating to improve mobile growth?
Yeah, I think it's a little bit, I think what I said before, I think 2 things is, one is I think we can make sure we improve our product so we have the best product that allows us to take market share. But I think also going after markets that we haven't called in the past. There's a whole set of small mobile processors, probably at least 100 that we've never called on before. So I think with the partnership with eBay, with some tweaking of the way we price our product and package our product, which is available now, it allows our salespeople to go after market we've never done in the past. So I think we can take market share in our existing market and also expand our capabilities in markets we never called on before, which allows, I think, to grow, which we, even this year, we grew faster than the market, and it prepares us when the market does come back to growth to grow faster than the market.
So I think that was the final question, Matt.
Perfect. Matt, Adam, thank you very much for addressing all those questions that came in from investors today. And of course, the company will review all questions submitted today and we'll publish those responses on the Investor Meet Company platform. But Matt, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to you and the company, could I please ask you for a few closing comments? Thank you.
Yeah, first, thank you for your time today. We've done this about the last, I think, 3 or 4 halves, reaching out to individual investors to give you a view of this. So we certainly appreciate, one, your time today, and secondly, feedback you can give us either in the poll and other things. Hopefully this is a great format for you. It's the right level of information you're seeking, but through the feedback, we'd certainly like to learn more. So I appreciate your time today, and we're really looking forward to talking to you in 6 months from now, and hopefully providing additional good news on our growth and profitability.
Matt, Adam, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of BLANCCO Technology Group PLC, we would like to thank you for attending today's presentation. That concludes today's session. Good afternoon to you all.
Thank you.